Wall Street. You hear the name all the time, right? But it's so much more than just a street in Manhattan. It's a symbol. It's the engine of the global economy. And honestly, it's the stage for some of the biggest, wildest dramas in modern history. It's an idea that, whether you know it or not, has a huge impact on your savings, your job, your future. So today, we're going to pull back the curtain and tell its story, from the very beginning to the wild forces that are shaking it up as we speak.
All right, here's how we're going to tackle this. First, we'll start with the totally bizarre meme stock frenzy. Then we'll jump back in time to figure out what Wall Street even is. After that, we are going to dissect the 2008 crisis, because that thing still casts a long shadow. Then we'll look at how technology just completely rewrote all the rules. And finally, we'll try to figure out what's next.
So let's kick things off with one of the weirdest stories in finance, something that just exploded out of nowhere and seemed to challenge the very idea of how the market is supposed to work.
I mean, this is the question, isn't it? Back in 2021, the whole world just stopped and watched as GameStop, a company everyone thought was circling the drain, suddenly became the hottest stock on the planet. How on earth did a massive online army of everyday investors manage to go head-to-head with some of the most powerful hedge funds in the world? Yeah, this was not just some quirky little fad. See, during the pandemic, a whole new generation of investors jumped into the market. They used social media to get organized, and they started pouring money into stocks that big hedge funds were betting against. The result was what's called a short squeeze. The stock price rocketed up so fast, the big guys who bet against it were forced to buy shares at a huge loss, which only pushed the price even higher. It cost them billions. So the big question is, was this just a one-off, crazy event, or was it a real shift in the balance of power? To really get what happened in 2021, we have to zoom out a bit. We need to understand the very institution they were fighting against. We have to ask a basic question. What is Wall Street anyway? Well, believe it or not, it started as an actual wooden wall for defense. But over the years, it changed. In 1792, a group of 24 stockbrokers met under a Buttonwood tree and signed an agreement. That was basically the birth of the New York Stock Exchange. Fast forward to today, and Wall Street doesn't just mean a place. It's become a nickname for the entire American financial industry.
And this evolution created this really powerful cultural idea, the split between Main Street and Wall Street. Main Street is the economy we all live in, our local businesses, our paychecks. Wall Street became shorthand for this other world of high finance, a world that often feels totally disconnected from us, and sometimes like it's playing by a whole different set of rules. That tension, that's a huge part of this story.
And absolutely nowhere did that tension explode more dramatically than in the one event that shaped our modern world and planted the seeds for all these future rebellions, the 2008 financial crisis. To understand the crash, you have to start right here. By the mid-2000s, there was this unimaginable amount of money sloshing around the globe, about $70 trillion, and it was all desperately looking for a safe place to land that paid out better than boring old government bonds. This created a massive, hungry demand for new ways to invest. And this is the incredible machine Wall Street built to feed that hunger. Think of it like a conveyor belt for risk. It started with millions of really risky home loans, subprime mortgages. The banks would bundle thousands of these together into bonds. Then, investment banks would take those bonds, slice them up, and repackage them. And the craziest part? The slices that were supposedly the safest got stamped with a top-notch AAA rating, making them look as safe as gold but with a much bigger payday. And right at the heart of this whole machine was the subprime mortgage. We're talking about loans given to people with shaky credit, often without even checking if they had a job. The entire global financial system was betting on two things: that these folks would keep making their payments and that house prices would just go up forever. What could possibly go wrong? Now, here's what made it all so incredibly fragile. The banks building this machine were leveraged to the hilt, a 40-to-1 ratio. Just think about that. For every $1 of their own money, they were playing with $40 of borrowed money. It meant they could make huge profits while things were good, but it also meant that the tiniest little dip in the value of their assets could wipe them out completely.
And then you throw in the ultimate gasoline on the fire, the credit default swap. Now, you can think of these as insurance policies on whether those mortgage bonds would fail. But because it was a totally unregulated market, you could have dozens of people taking out insurance on the same bond. It created this hidden, tangled web of bets and counterbets that was way, way bigger than the value of the actual mortgages themselves.
And then it happened. The housing market didn't just cool off, it crashed. People started defaulting on their loans, and that whole conveyor belt just collapsed.
In September of 2008, Lehman Brothers went bankrupt, and it was like the entire global financial system had a heart attack. Credit froze. To stop a total meltdown, the government had to step in with a massive bailout, calling the banks too big to fail. And you can imagine, for all the people on Main Street who lost their homes and their jobs, watching Wall Street get rescued, well, that created a lot of anger.
This quote from Alan Greenspan, wow. He was basically the high priest of deregulation. And here he is, admitting that the central belief of modern finance, the idea that big banks would police themselves out of self-interest, was totally wrong. The whole thing was just shattered. And for so many people watching this unfold, the bailouts, the executive bonuses, the fact that no top bankers went to jail, it just cemented this feeling that there was one set of rules for them and a completely different set for Wall Street.
So that anger from 2008 just sat there, simmering for more than a decade. But for it to finally boil over into the meme stock frenzy, it needed one last crucial ingredient, a tech revolution that changed everything about who could get into the market and how. And what's so wild is how this all connects. The real turning point was in 2019, when all the big online brokers suddenly dropped their trading fees to zero. They could afford to do it because of business models like payment for order flow, where they actually get paid by bigger firms to send trades their way. But for you, the user, this was a game changer. The doors to the market were thrown wide open. All of a sudden, buying and selling stocks wasn't just free, it was something you could do instantly from a slick, almost game-like app on your phone.
And that brings us right back to where we started. We began with this mystery of GameStop, and now we can see all the breadcrumbs that led us here. From a handshake under a tree 200 years ago, to the ashes of the 2008 crash, to the invention of the smartphone app.
So here's the bottom line. The whole meme stock thing wasn't some random fluke. It was the perfect storm. It was a collision of these incredibly powerful forces. You had the lingering anger from the 2008 crisis, you had the coordination power of social media, and you had technology that gave millions of people instant, free access to the game. And this really is the big question hanging over Wall Street now. This new army of investors has proven it can move markets in a huge way, but will they just stick to being short-term traders looking for the next big pop, or could they actually organize that collective power to change how companies are run from the inside, turning from traders into genuine, long-term shareholders with a real voice?
For centuries, the story of Wall Street has been this constant cycle of boom, bust, and reinvention. The 2008 crisis came from deep inside the system, from the bankers and the complex products they created. But the GameStop saga showed us a totally new kind of power, one that came from the outside. So it leaves us with this one fascinating question. When the next big shock to the system comes, where's it going to come from? The old guard on the inside or the new crowd on the outside?